Interesting. All right, okay.
Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, traders and investors. Welcome to this Monday morning, May 22nd edition of Benzinga's Pre-Market Prep. I am Spencer Israel here with Joel Elconin and Dennis Dick on the show today. We're not quite all the way through earnings season, but we got a couple headlines to discuss. The big one being, of course, changes at the Ford Motor Company right in our backyard here in Detroit. So we're going to talk about that. We're going to talk about the follow-through from the diplomatic action over the weekend in Saudi Arabia and a merger in the market HUN and Claremont. A couple earnings to preview as well. Our guest today, 8:35, the one and only Victor Anthony, Managing Director and Equity Analyst at Aegis Capital, is going to recap his thoughts on earnings season. For us, Joel, how are we doing in the S&Ps right now?
We're in the green a little bit by 2 points, holding that nice gain from Thursday and Friday. Pre-market high at 85 and a quarter. We'll be watching the high from Friday at 88 even. On the downside, not a lot to look at. That pre-market low, 78 and a quarter. So no continued downside until we at least take out that level. Moving on to the crude oil market. Crude, again, in the green here. Good talk by the Saudis and the Russians getting oil price up. They got it up here, 65 cents at 51.32. Pretty good volume trading here. You can see the crude oil market. Let me go a little bit more on the daily here. Look at that. Fourth up day in a row. A lot of air up to 53 bucks. Gold and silver continuing their rebound here. Gold up 310, trading firmly in the 250 handle. We have silver in the green at 17 bucks here. 17 on the nose, up 2 cents. So 8:03. Let's bring in Dennis. Dennis, how are you doing on this glorious Victoria Day?
It is. It's Victoria Day. So holiday in Canada means also no babysitters in Canada here. So my wife's got her hands full because she's had the C-section, she's got the 10-day-old, and she's got the 2.5-year-old. So not envying her at all. But I'm on the radio here, so we're still making it out here on our holiday Monday.
And you will be working next Monday for Memorial.
I work all the Mondays.
Right.
I work the Canadian holidays. I work the U.S. holidays. I just work, Joel. I don't get breaks. I'm not allowed breaks.
All right, before we get into individual stocks, we were trying to come up with a new name for the market. I called it the don't care market or the fear of missing out market. And did you come up with a new acronym, or did we not?
Actually, I like the fear of missing out market. So, and that's what you're coming up. FOMO?
Yeah, FOMO. Yep.
I like that. Fear of missing out market. And if we start hearing that on CNBC, we know for sure.
No, Dennis, we didn't just come up with that.
We didn't?
No, I assure you we didn't.
Have you heard FOMO before? I've never heard FOMO.
Just Google it.
The FOMO market?
Just Google it.
No, the market. It's just.
But for the market.
Oh, okay.
Overall, for the market.
Okay.
I've never heard him say the FOMO market on CNBC. And I watch CNBC. pretty much, in the evening because we don't have a Benzinga show in the evening. So I'm always watching it for at least 4 hours there in the evening as I'm, trading your earnings reports. It's something to have on in the background. I've never heard FOMO market on
No,
CNBC.
he's right about that. It's like it's a term used by millennials and stuff, isn't it? Kind of
Sure.
something like that.
Yeah,
And
it's one of
Okay,
those
but
double.
have you heard it in
No.
relation to
Okay.
the
no,
market?
Fine.
thank you.
No, I
All
haven't.
We're
right,
gonna.
so that's what we're trying to. We are saying it first here on Benzinga's pre-market prep. We call it now the FOMO market, the fear of missing out market, because every time this market pulls back, it doesn't matter the reason. They come in here and they buy it with two hands because you have so many money managers that are fearful of underperforming their peers. And if you have a little bit too much cash, you use that opportunity to deploy that cash. And that's why the S&Ps, when they pulled back last week on the fear that Trump potentially could get impeached, which was nonsense, we're right back here. How far are we from the all-time high here, Joel, now? On the
24.
S&Ps.
The all-time high or the all-time closing high?
Closing high. We like closing highs.
98.50. So we are
98.50 is the closing high. And where are we right now?
83 and a half.
Yeah, so we're on the way back here already. The FOMO market, you can't fight it. We used to call it the honey badger market. FOMO's the new thing. So fear of missing out market, everybody has to jump in. There is no fear of being in this market anymore because here you have all these worries over the weekend. I mean, we got missiles to talk about. We got, further, Trump issues to talk about here. What else? There was all kinds of fearful stuff we were talking about on the pre show. What else do you have to fear of?
Well, there's an arms deal that we have now with Saudi Arabia.
That doesn't sound good.
Yeah, I mean, what are they going to do with $6 billion worth of arms, right? We nothing done.
No worries there whatsoever.
Right?
No worries anywhere. Missiles, that's not a worry.
Comey's supposed to testify, right?
That's not a worry. The big worry is you might miss out on the next rally. That's the worry now. What have we come to? Everybody forgot the financial crisis. Everybody forgets. This is just the FOMO market. I don't know when it stops, but every time we pull back, buying opportunity.
I watched the Wizard of Lies last night, the Bernie Madoff expose.
How was that? I heard mixed reviews.
It's depressing. It's really depressing. I just don't know what he did with $65 billion. I mean, it's all gone. I mean, they talked about how he just ponzied it back and forth, but I don't know. It's just
every time you Ponzi it, though, you're losing out because you're pretending you have gains that you don't really have. So the way the Ponzi scheme works, if you're pretending you have a 10% gain that you don't really have,
right.
The only investor that cashes out is getting their money back plus 10% of somebody else's. So if you continue to do that, you could Ponzi away $65 billion, especially when it goes on for how many years did it go on for?
16 years. He said that.
16-year Ponzi
I still think though there was a real bad trade in there. I think a lot of it came to bear during the financial crisis, right? And so I don't know. I just think there's something there. I mean, I can't rewrite the movie, but watch it. I'd like to get your opinion. De Niro.
I heard they didn't show any they didn't show the regular guy getting ripped off. They were acting like it was all rich people who were getting ripped off.
They showed a little bit. They did. Yeah, they showed a little bit of I'm not worth a lot of money. One interesting part was when he tried to sell Ken Langone on investing, and basically Langone was like listening to him and talking to him, and basically goes, "Man, you're just full of." I don't want to say the word here on radio, but check it out, Dennis. I would like to get your word on it.
I'll put it on the bucket list here. Let's jump into the markets and individual stock news. And in the Motor City, we got Ford. Ford trading up 2.67%. Hallelujah. This is unbelievable because Ford never trades up. And you know what I'm saying? I don't even have to know the news, but it seems like every time this thing comes up, even though I own it in my invest portfolio, it's probably a selling opportunity. This is the opposite of the FOMO market. Every time Ford pops up, they seem to find more sellers. Give us the news here, Spencer. It's driving Ford higher here.
Mark Fields is out, and Jim Hackett, the Joel's guy, the former Michigan athletic director, is in. Whoa, Jim Hackett has been at Ford. He runs their smart car division. And so he's the new man. Mark Fields is gone. Jim Hackett in.
I mean, they had to do some changes here. Obviously, the stock prices just continues to be depressed. Got the 5.38% dividend. We're pricing all these like Tesla's going to take them, out of business here. I don't know what's going on. I've been stuck in the value trap. I'm not adding to the position. I'm almost thinking, on a certain pop of selling the position because, I was wrong with this. I picked some up at 1250. Thing gets up here into that 1150 area. I think I'd lighten up, but I don't even know if we're going to get close to there. I might even lighten up before that.
Trading at 1116, almost a million shares have changed hands. Little bit of rally ahead of this. Looking at your pre-market action, your pre-market high is 1122. I see a high at 1126. So I'm not going to pick, that like 1150 a point to sell. Let's see if it can close above 11. I think that would
Yeah,
just be.
I think it's even going to struggle to do that. I mean, we love, Ford, we love the Motor City here. We're headquartered there. But that being said, this stock is depressed.
And I
And
just,
when you have depressed stocks that get lifts like this, they usually find more sellers.
you sound so depressed over
I
this.
know. I am because I own Ford and I love Ford. I have one in my driveway here right now. I've got friends that work at Ford. So, and people who are saying this, the great, it's a great company here. But at that being said, it's not a great stock. And,
Uh,
it's just not been a great stock for a long time.
Wouldn't you
So
take solace in the fact that Jim Hackett is known for being like an outside the box thinker, right?
you know what?
it
When you
helps.
look
I mean,
at
that's why it's popping up. But I just know the way stocks trade, and it's like the momentum market. The momentum's all downside in Ford. So am I going to get excited here and say they're going to turn it around overnight here and everything's going to change? I don't know. I don't think even if they do, I don't think it's going to get priced into the shares. I think this thing probably sees, and I'll throw out a bet for you there, Joel, if you want to take it. But the low of the move is 1067. I think we see 1066 before we see. You got to add 50 cents there. Do their math. 1170 or whatever it
you
is.
were gonna give me like the edge of it trading up in the
A
pre.
little bit of an edge, yeah.
Well, man, just because
I think we see new lows on this again. And here I am. I'm talking directly against my book here. Who talks against their book? Because I own Ford.
look
I'm
on
talking against my book.
on Stock Twits ATM charts. I don't know if he's listening. He said after what Jim Hackett did for University of Michigan in time of crisis, I would not bet against Jim Hackett. There is a rumor that he is going to hire Jim Harbaugh to run the company, so that could give it quite a boost. I'll take that, Dennis. You're just giving up the edge. You usually don't do that.
Okay, so let's clarify it here. So 1066, I say makes a new low. We'll take. I'm not really giving up much of it. So it's up 50 cents right now at 11. Is that my math right?
11.15.
11.
Yeah.
11.15, roughly 50 cents. So add on 50 cents, I would bid us up to about 11.65, which would be actually coinciding with those couple tops where we had 11.68 and 11.70, which Joel likes. So if I would have said 11.80, he would say no way. But because I give him those two highs.
All right, 1066 versus 1166, and we'll just go a lunch on this one because it's.
All right, sounds good. You owe me like 5 lunches already.
No,
so
I
gotta come over
don't.
there and collect
GM.
these.
Let's just talk GM here. Talk Motor
Let's
City.
do it.
This
Are we
stock.
getting any sympathy move here? We're up a little bit. A little sympathy move here, General
No,
Motors.
I mean these things I've wanted to invest in them. I mean, nice dividend and stuff.
I did. It didn't work, Joel. I want out now.
GM needs to clear 33. That was your high on Friday. Let's take a look at FCAU, right? Is that, Fiat Chrysler? I mean, that chart looks
It's its own animal. It
Yeah.
doesn't even trade. There's no resemblance even. The correlation with Fiat and Ford and GM is like nothing. Zero. It's not -1. It's not +1. It's like zero. It's like not correlated whatsoever.
I mean, I guess everyone is just going to be driving Teslas. I guess I did see one on the road. Look at this. We got a little.
Saw a Tesla? Cool.
Yeah, I saw a Tesla. Yep, the other day. When I was going down to the track on Saturday to bet the Preakness, which didn't turn out
How'd
to
you
be
do?
terrible.
With-
Yeah, and you know what? I always dreaming, Horse. If you're listening or the owners, I think it's my fault because I was watching the race with my family and I went to turn off the volume and I actually turned it off. And I was scrambling to find the other remote. So
That's bad in like a 60-second race.
yeah, and no, there was a good upset there. But let's keep an eye on Tesla here because if you do draw a nice trend line off this 240 low, you hit the 250 low, maybe you hit that 290 low. kind of coincides here. And there's a double bottom here in Tesla. So I'll give you a number of the week in Tesla. Let's see how it's trading in the pre-market. It is trading up a little bit, but keep an eye, folks, on 305 and a quarter. Two lows from Wednesday and Thursday right there. That's a big number there in Tesla. $7 above it right now.
It's gotta keep. I'm gonna continue to say the number for Tesla is $300. It needs to stay above 300 and continue to close above 300. Once it loses 300 again, I'd be concerned. But if you're long this thing, I think as long as it's above 300, I think you're okay. I think it starts cutting below 300. That's where I'd want to be a little bit cautious of being long.
All
Big
right.
psychological numbers on Benzinga's pre-market prep. All right. So jumping away from the automotives and into defense. Because, okay, the news over the weekend, if you weren't paying attention, Spencer, this missile stuff. Can you enlighten us just for a minute here? Because all the defense stocks are trading significantly higher.
Well, how about I just run through what happened over the weekend? So we got a few different deals. There was a $40 billion. I'm sorry, let's start from the beginning. $50 billion of energy agreements with Saudi Aramco, right? Which is, of course, going to be the biggest IPO ever. So they say when it IPOs, eventually next year, the year after, I don't know. So $50 billion in energy agreements with Saudi Aramco, a $40 billion U.S. infrastructure fund created by Blackstone, and an arms deal worth $350 billion over the course of a decade. And that was with Lockheed Martin. So those are the three big deals signed over the weekend.
Okay, so those are the deals. Now, talk about the macro environment, or talk about, the political environment with what was happening with the missiles over the weekend.
Oh, plus you got North Korea launching, what was it, the 11th missile since Trump's tenure? I forget the exact number, but it's a lot. And they say, they have the U.S. in their sights, is what they say. So, I don't know.
That sounds very scary. And that's why the market's trading higher here this morning. But I'll tell you, the defense stocks are listening to all of that, to the contracts and also to the potential that, there's missiles concerns here. Lockheed Martin trading up 8 points in the pre-market. We've got Raytheon, RTN trading up 3% in the pre-market as well. It's $5. General Dynamics also trading up a couple bucks. We've also got Boeing, BA, trading up $3 in the pre-market. So all of this obviously helping these stocks here this morning. Lockheed Martin, let's go to that one here, Joel. I believe LMT is trading now at a new all-time high once again.
Yeah, well, this is a thinly traded stock. You hit 284.06. I think that was an odd lot. But instead of going through all the individual stocks here and we can look at them if people have an interest, this just kind of reminds me of what happened last Monday. Remember what happened last Monday in a different sector where you had everything trading up huge and they ended up giving away all those gains and actually going red on the week? Do you guys remember?
That was in the security stocks because of the hacker stuff.
Exactly. So
there's a point to be made there.
Yeah, I'm not saying that that's exactly what's going to happen, but just look at Palo Alto Networks. I mean, that one ended up holding the gains on Monday. But, Dennis, I mean, we should go and find the clip on that because it got right over 120, peaked that day, 3 down days. The only thing that saved it on Friday, it's still showing a red candle, but it did get it. Was green on the day, did get an upgrade from somebody. So, these kind of news events, I mean, if you're long going into this and you get this, this kind of price action, I think it's hard to, not to let something go at an all-time high or something at that level. But, I don't know, we'll see if they can hold these gains. And now Trump's in Israel, correct?
Yep,
So,
and also, if I can backtrack on Boeing, Boeing signed a deal over the weekend as well with Saudi Arabia where they're going to purchase some helicopters, some guided weapon systems, and a whole bunch of good stuff.
Man, this doesn't sound good. I don't like how this defense, but we'll see what happens. Boeing hit 184.10. That's where it's trading in the pre-market. Let's look, 187.21. I also see a little pesky high sticking out there at 185.65, and then the all-time high at 87.21.
Let's just talk here once again, and we've been mentioning this on the show quite a bit about the contrarian investing and how that's been working. Because remember Boeing at the beginning of 2016, remember how negative everybody was on the stock, and the stock collapsed almost down to $100 that one day, got down to $102.10. And when everybody is bearish the stock, that's the low. And since then, we have been straight up. And now, if you talk, and everybody on CNBC, they'll all be loving Boeing. We all say, oh, this is the great company because the stock's at all-time highs. And they're looking at price. They're not looking at company fundamentals. They look at price, and then they determine. The analysts do the same dang thing, most of them. You know, some good ones out there, some good analysts that actually use fundamental analysis, but a lot of them chase price too. And I think when you're looking at price as your first, criterion for whether the stock is good or bad, and I know we do it on the show there too. Everybody seems to do it. So you have to do it as well. But, what happened to good old company, fundamentals and crunching the balance sheets and analyzing, and trying to find out, if the stock's got value or if it doesn't. People don't do that stuff anymore. They look at price, they hop on board. Stock's hot, they hop in. Stock's not hot, they sell it. And, here's an example. Like if you are doing, contrarian investing, not contrarian trading. It would have worked here in Boeing in 2016 at the beginning of it when everybody threw this stock out at $102.
And also, if you would have faded, you're talking the beginning of 2016, but in November or December of 2016, I can't even figure where, like right here is when there was a negative Trump tweet. And they pounded it, and then it ended up closing green on the day. So, there, that was just a little bit short.
Yeah, that was around November. That was in November after he got elected. I remember that too. And it fell like $8-9 on a Trump tweet. Those Trump tweets, and we don't see very many of them anymore in individual companies. They must have brought them in there a little bit, but those were all fades. Like whenever he was talking good about a company or bad about a company, it would pop or drop, and within a day or two, it would give it back. Because it's a tweet. I mean, like really, it's really, Boeing and going to be influenced here long term because Trump said something, negative about a contract. Like I think that was, that they weren't going to give him the contract for the Air Force One, wasn't it?
Yes,
he said something about the cost overruns or something.
Yeah, it was
like
too
that.
expensive or something. And boom, all of a sudden they knocked Boeing down $8-9. That was one of the best opportunities. That was when it fell under $150. I remember that.
Was it 150?
My goldfish memory working on that one.
All right. S&P's just staying green here by nearly 2 points at 83 and a quarter. Kind of very muted action here since we started the show. Oil continues to climb, up 70 cents at 51.37.
Let's talk oil here because we have come back here on oil quite a bit from the lows. I mean, I see my gas prices going up here as well slowly here. What are your thoughts here? Let's break down the futures, and if you want, you can look at the USO.
All right. Had that big hit. I mean, that print under 44, I know that was after hours of pre-market trading. Air up to 53 here. I mean, this is just looking at the daily charts. Both the Saudis and the Russians, the old repertoire. We're cutting, production. We're going to cut it through 2018. That's what the bulls want to hear. So 53, looks like we're destined for. Besides that, I don't see much after that. Recent high of the move. Let's go. Have we ever gotten over $55 since we traded 26?
Long time.
Exactly. It's been since 2015. I don't know. The monthly charts are shaping up here kind of interesting and crude. You got a rolling contract. They roll this thing every month. So it's pretty hard to, give you designated levels. But you can see here on the monthly charts, you got to print at 58.04. But I would just call, 55 the next hurdle if we can clear 53.
Did you get your Barons here over the weekend? Because I didn't get a chance to see who they were highlighting there. I know you're a big fan of Barons there, Joel. What was on the cover?
Retail stocks to own in the Amazon environment.
Really? Which ones?
Well, I can't name all 14 of them.
I got them. Best Buy.
Spencer's got it.
Best Buy, Home Depot, Nordstrom's, Walmart.
Costco. Costco was out. There's 14 of them, not 4.
Oh, okay. Well, I'm only reading a highlight here.
You know what the most interesting one is? Is Nordstrom, Dennis.
I was going to say that too.
Can you get behind this stock here? I mean, are they really?
I don't know.
I mean,
I'm not getting behind it. My
Mr.
money's not getting behind Nordstrom.
Mr. Contrarian Investor, come on, look at the chart
The one,
here.
okay, so here's a good thing, like you've got to still do your homework here. So you can't just blindly buy any stock
Oh,
that's going
okay,
down. Saying
okay,
I'm a
Dennis.
contrarian, and I'm going to go in. The retail sector's in a world of hurt. Like I've been saying for a while, I think some of the big box department stores are going the way of J.C. Penney and Macy's. I was saying that up at 30. Things at 23 here now. I'm not buying Macy's. As a value investor, you'd say you'd lick your chops and say 6.51% dividend. Miss Macy's looks real cheap. I think this is a classic value trap. I think Macy's got major problems here. And when I see a chart of J.C. Penney, I can't, sure, okay, maybe in the stores are a little bit nicer. Maybe they've had it together for a little bit longer, but I don't know. I'm just starting to think that some of these major box department stores are going that way. And I think Macy's is a prime candidate to go the way of J.C. Penney and Sears. And that is scary.
All right, Macy's, you can see that ugly on the
That's
monthly
for,
chart. Let's look on the
yeah,
dailies to see if I mean, these are pretty heavily traded stocks. So, well,
very.
a little bit of a bottom here, Dennis. We've seen this trick before, though. You got 3-4 lows in the same area. Actually, you had a long consolidation between 28 and 30, and then
It's
earnings took it out again. So you got another consolidation period. So if you're really looking to hop on this thing on the long side, instead of trying to pick a level, a support level to lean on, you have 4 lows right in the 22.50-60 area, with 22.43 being the lowest of the area, and you have 4 highs at the 23 and a quarter area. So kind of bunching up here. We'll see if we can get it decided and move one way or another. I guess.
I
Go ahead.
I don't mind that candle on Friday. We made a new low and then we ended up closing green. I like that. We're seeing some follow through here. So, all being said, long term, I do not like Macy's. Short term day trade is interesting here from the long side. And I'm just saying it because we're showing a little bit of strength. We've been showing the last few days, we've been saying that the retailers were kind of starting to show some life, but then they turn around, and some of them get hit. I don't mind some of these candles. Kohl's had a rough morning, but then came back as well on Friday. Nordstrom, same thing. Stock cut down through 40. Everybody was selling it in the morning, right on that opening print, and then it got some life and ended up closing right close to flat. So if these things can get above, the closes or the highs from Friday, let's say the highs from Friday. So let's say Nordstrom gets above 41.23. Let's say Macy's gets above the high from Friday, 23.16, which it's above right now. Maybe there's a shot for a bounce here. These things are heavily shorted. There is going to be that potential for a little bit of a squeeze. And like I said, nothing goes straight to, we won't say zero, but nothing goes straight down. So even though the trend is not your friend, there's opportunities for little bounces. And I don't mind it, trying it if these things can get above Friday's high.
Look at Sears. I mean, you see the chart and you see the run up from like 8 to 14, and you're like, it's coming back down. And then,
I know. It's just a matter of when.
a 2-for-1 stock split since the middle of April here. This thing got up over
3 weeks.
Look at that.
3 weeks it got cut.
Yeah, I don't know. I
wonder how you lose 50% in Sears when it's been down forever, and you lose another 50% in 3 weeks. It's ugly. Sears is just ugly. J.C. Penney's is ugly.
Yeah.
All these stocks, are in a world of hurt. Amazon has put the hurt to all these companies.
Yeah, but just keep an eye. I mean, you can always put buy stops above here, and catch it at least with the momentum. And something goes up. Obviously, when you're doing that, there's a chance you get caught in a little bit of a false breakout here. But I don't know, Sears. Let's see what happens under $8 here. Made some lows in March and April under 8. Kind of a little double bottom from Thursday and Friday. So that's a big drop. The thing is, that thing's just so thin. It's very hard to trade on an intraday basis.
Valentina in the chat's asking us about Children's Place. I recall saying, that was an awful candle off of earnings. So stock got up there, kissed the all-time high, and collapsed. And I think I even said on Thursday or whatever, I said, watch it doesn't take out the lows at 110, and it did, and we went down to 105. So awful 2 days for PLC off a pretty good earnings report, and that's just it's wrong sector right now. 105 though. That being said, that is a big number there, Joel. I know you're going to highlight this too, because they had a 105.05 low on the 18th, and then actually on Friday we got down to 105.52. 105 needs to hold. If 105 goes, I think can see $100. and in a hurry.
And there's nothing there. There's
There's
absolutely
nothing in there.
nothing there. But yeah,
Absolutely, if you're long this, it needs to, if you're trying to pick the bottom, it needs to hold 105. I think 104, 103, 102 could cascade those through those handles in minutes even.
All right, Down War Dog has been pretty patient. This is his second request for the maker of Spam, Hormel Foods here. And nice candle on Friday. I'm not sure what got it off the mat. I'm just looking at
You
this
know
and
what did,
what?
Joel? And I was going to highlight this too, and I forgot about it. And thanks, Downward, for bringing it up. You had the Campbell Soup report, which was not good. But the stock, they came in off the open, and we talk about these defensive stocks, and they came in and they just bought the Campbell Soup off of a disappointing earnings report. Stock opened, had a little washout right off the hop, and then they just bought it all day. And stock came right back. Well, not all day. They bought it in the next few minutes, and the stock got back almost 2 points of losses in the next 20 minutes. A food stock. And then if you look at the other ones, they all did the same thing. They all kind of opened down to flat because of Campbell's. And then what you do is you're crushing that sympathy play, trader. We've been saying on the show that sympathy hasn't been working. Anybody who was shorting the open on the food stocks got hurt. So you have all these day traders who short the open because of the Campbell's disappointing numbers, even on a stock like HRL, and they get hit. And the stock opens just down a little bit, and the day trader's saying, all right, this should come in a lot more because of the Campbell Soup. Then they start buying Campbell's. Now they're buying your other sympathy stocks, and all of a sudden you're short the open, and you're like, uh-oh, I'm in trouble here. And they're scrambling all day for cover. So you had day traders caught short on the opening on Hormel, on Tyson Foods, on Kellogg's, on General Mills as well. And all these stocks actually caught a bid all day because of that.
Yeah, and we were actually talking about these as like stocks that are getting down longer term levels. Also, we're value investors, someone like a Mr. Buffett, licking his chops on things like this. So, nice day for a lot of these stocks. Just keep an eye on Friday's high, especially with something with this Campbell's Soup. I think it got up to 56 early in the session, had to drop down and came back. But nice gap to fill between 56 and 57. Also, a stock that we haven't talked about a lot, but is always in the news. Dr. J wants to know about Nike here, and this thing has just had it rough since earnings. Oh, big day yesterday for Friday, 51 to 52. I see two tops just over 52. If we can clear that, looks like we're open on the downside. Buying it on the cheap, had a couple lows under 51. This was a while back. This was at the end of 2015. But once again, you just talk about a sector that's out of favor.
Yeah, it is. It's another retail sector. I mean, and Nike absolutely needs to hold 50. That's been the level of support for the last couple of years. I know we cut through it a couple times, but overall, when you just do your rounding error there, it's been $50. That's been the area of support there, and that's the area it needs to hold, and that's the area I think it might test here. So, it's moved this far. It's moved from $58 in March down to, got to 50.81 on Friday. Could we get a bounce in here? Sure, but longer-term trend is not your friend on this one either. I think the $50 is critical for NKE to hold.
All right, 8:32. I have a few minutes on before we bring in Victor Anthony of Aegis Capital. Did we talk about the deal here between Claremont and Huntsman?
No, we haven't yet. I just want to give quick imbalances, and then we'll jump to that deal here because we got a few interesting ones here this morning. I don't know what's happened to General Electric. It's up over 1% here now, and we got an actual buy imbalance in G of 131,000 shares. Stock is trading higher in the pre-market, and stock was had a pretty good Friday as well. Opened up right near the lows of 27.55 and closed near the highs up at 28.05. Now we're up at 28.35 here on GE. Nice buy and balance for that one this morning. Ford 193,000 to buy this morning. Alibaba continues to run up 76,000 to buy in Alibaba. Twitter going the opposite way, although it's trading up in the pre-market. We also have a 33,000 share sell and balance here in Twitter this morning. So a few interesting ones just to note there. And then if you want, we can talk about the deal.
All right. Was Twitter down all day on Friday, or was that just for some people?
Twitter worked fine for me on
No,
Friday.
it worked fine for me, but I was on mobile all day.
Okay.
But it worked
I
fine
know
for
it
me.
was down for
I was on mobile too.
part of it. Boom. I just wanted before Alibaba. Holy mackerel! They sell that thing off their earnings, and then they just rip it back and bring it right back to a new all-time
I love
high.
that stock right now.
Yeah, that stock, a Honey Badger stock. Not a big premium for the Huntsman, a chemical deal. Spencer, you got any details on that?
Yeah, so Huntsman and Clarion, so tickers are HUN and then CLZ. NY are merging through an all-stock transaction. I'm looking for the number. So it's looking at. I'm not seeing a share. Oh, okay. Clarion shareholders get 52%. Huntsman get 48%. Looking for a
Kind of
share
a merger
price.
of equals
Yeah,
type
it's
of deal.
pretty much. Oh, it's 1.2196 uh, shares of Huntsman Clarion for each Huntsman share. So Huntsman shareholders get 1.2, about 1.2 shares for every share
Okay.
of the new company.
HUN trading up. I mean, this stock got a nice lift the last couple of days. Not sure if anybody got the memo, but it's up here on significant volume as well. It's already traded 460,000 shares, trading up 7.82%. I mean, and their stock is an ADR, so this is
Tough
primarily
play.
traded. What country? Do we know what country this is?
Switzerland. I think it's a Swiss.
Switzerland?
Yeah, I think it's a Swiss
Okay.
company. Yeah, so I mean, you had the DuPont and Dow deals, so not a big premium being paid here. So this will be a tough one to trade on the ARB, as you don't have two U.S. companies. All right,
Yeah.
8:35 here, and we got one guest for the day, and he's a good one. Victor Anthony, Managing Director and Equity Analyst at Aegis Capital. We'll be right back with Victor.
All right, welcome back, traders and investors, to Benzinga's Pre-Market Prep. I'm Spencer Israel here with Joel Elconin and Dennis Dick. We're on the line now with Victor Anthony. He's a managing director and analyst at Aegis Capital. Victor, how's it going today?
Good. It's good. It's a good weekend, and looking forward to a good.
Good. Hope good. Always good to have a good weekend. The Monday sneaks up on you fast. So we're just about all the way through earnings season now. A couple of stragglers still left to report, but now that we're most of the way through the bulk of the earnings season that actually matters, at least the largest stocks, give us your overall thoughts on the performance of the S&P 500 this earnings season.
Well, I mean, from what I'm seeing, it looks like the bulk, the majority of the stocks within the S&P have either met or exceeded expectations, and so that's probably what you're seeing reflected in stock prices today. In my sector in particular, just about almost every single stock had really, really strong numbers. There's a few notable exceptions, Yelp being one of them, I think Twitter being the other, in the sense that for the guidance, but the stock still outperformed, nonetheless. But overall, I thought earnings season was pretty good.
No, you're mostly a tech and a media analyst. I want to ask you about one of stocks in your coverage that you're not bullish on. Twitter, you have a sell rating. Made news last week that Bizstone's coming back to the company. Does that do anything for you?
Listen, I think Twitter has had a number of announcements over the past several weeks or so, including an updated relationship with the NFL, a new partnership with the NFL, an extended partnership with Bloomberg, and then you had the announcement that Bizstone was coming back. But in my view, nothing has changed fundamentally about the platform. You still have what I think is anemic user growth, as well as what you have is negative advertising revenue growth. So I'm still negative on the stock, despite the fact that Bridgestone is coming back. Not sure exactly what his intentions are. I'm hearing that he may at some point assume the CEO role. Not sure, but I don't think that really changes anything fundamentally about the platform today.
So what would have to happen for Twitter for you to change your rating from a sell?
Well, my biggest concern about Twitter is the fact that the advertising revenue growth has turned negative. O and O on an owned and operated advertising revenue growth has turned negative. The company's losing market share. There's continual management departures, even though that has essentially ceased over the past month or so. Like I said, O&O advertising revenue growth is declining. So a couple of things has to happen. Number one, that advertising revenue growth has to turn positive again, and there's very little visibility in my mind into the timing into when that growth reaccelerates or turns positive. They have to ward off significant competition, I think, from Snapchat, from Instagram. So that will take some time. And so they just essentially have to stop losing market share, advertising market share. So when that happens, and when I see evidence that that could happen, that's when I'll turn positive on the stock.
All right, I want to ask you about another news item. We had Pandora, which you, as in your coverage, you have a buy rating on Pandora. We got the rumors last week about a potential merger there. I want to ask you, or does it make sense of Pandora selling itself, or does Sirius make the most sense out of all the potential acquirees?
Well, I turned bullish on Pandora last summer for two reasons. One was I thought that they will have success with the on-demand launch, which I think was the right thing for them to do because the market was demanding that. And number two, the potential for an acquisition. So those are only two reasons I turned bullish on name after having been negative for years. And so the first one, which is the on-demand launch, that was delayed, so that was somewhat disappointing. But it's launched now. They have some trial subscribers. I think 500,000 was the number they gave. We'll see how that progresses. I think the market is expanding, and I think Pandora could leverage the existing user base to grow that on-demand service. Part two of that is really just the acquisition. And Liberty has made an offer in the past, $15 per share. They've been vocal that they would like to combine Sirius and Pandora, which I think is the right thing for Sirius, given the fact that the growth has tapered at Sirius, and the fact that I think Greg Maffei and John Malone are realizing that Sirius will face, I think, secular challenges from when cars become connected cars become ubiquitous. So they see that challenge for Sirius in the future. And I think Pandora can help solve that, or offset that secular challenge coming at them. So right now, the only company that we know of that's vocal as looking to buy Pandora is Liberty, and whether or not they'll bid against themselves, and that's probably what's keeping the stock at the levels where they are right now. And Liberty has been public that they won't pay $10 is really the price that they're looking for. I think some investors are thinking that that's $10 inclusive of the premium, which is why the stock is where it is. I think it's $10, then apply a premium on top of that. So I think investors are missing out on an opportunity to own a stock that could be taken out, I think, for a premium of roughly 20-30% from where the stock is trading right now.
I want to go back to Twitter. We have a question from the chat on Twitter for a second. We'll go back there. The question is, can you think of another company that has gone from a decelerating MAU trend back to growth? And what kind of value do you ascribe to that kind of turnaround potential?
Well, I don't know of a company right now that has done that. And they are telling us that, first of all, I don't really know what the numbers are. They're telling us that DAU growth is accelerating. They haven't actually given us actual numbers, so we just have to take them at the word that DAU growth is accelerating. And that's fine. That's positive. And I think you could. The bulls on the stock will tell you that ultimately advertising revenue growth will follow that trend. But we are. I'm not convinced that if you look at what happened with Yahoo, for instance. If you look at the mobile trends, there was at one point that the mobile user growth was accelerating, but advertising revenue growth never really caught on for a number of different reasons. And I think we're starting to see the fact that Yes, if you believe that the DAU growth is accelerating, according to what the company is saying, you have to wait about a year or so before advertising revenue growth comes into play, and that's fine. The problem is that you have Snapchat, you have Instagram, who's aggressive in pursuing the advertising dollars that come in online. So they're bumping up against significant competition within the space. And I think if you speak to the CFO, if you speak to the CEO of the company, they'll openly admit that it'll take a long time for them to convince advertisers that they need to come back onto the platform and really allocate spend onto the platform because user growth is starting to reaccelerate again. That's a long sales process that'll probably take another year. So that's why I'm saying visibility into whether or not that happens will take some time, in spite of the fact that you have that reaccelerating daily active user growth that they're pointing to.
I have a question now from Nick Donato on our news desk. You have buy ratings on Amazon, Facebook, and Google, the big blue chip tech names. Going into just talking about this next quarter, which one of those is your favorite?
Amazon has always been my long-term favorite. I've been bullish on that stock for quite some time now, and I think I picked up coverage at sub 200. And the reason why I'm probably more bullish on Amazon versus Alphabet and Facebook, even though I have buys on the other two, is really just the market opportunity you have for Amazon. And if you look at just Amazon's market cap as a percent of the market opportunity, it's still in the single digits, whereas for Facebook, that's roughly 60% penetrated of advertising market cap versus the advertising potential. And for Alphabet, Google, that's roughly close to 90%. And so when you look at the overall market opportunity, it's really advertising, and that's 650, 700 billion globally, depending on what third-party advertising platform that you look at that actually publishes these market stats, and it's only growing about 3%. And so, but then when you look at retail, that's roughly a $10 trillion dollar opportunity that Amazon is exposed to. So the addressable market for Amazon, I think, is significant. Amazon is just essentially bulldozing its way through the space, leaving a lot of dead bodies in terms of retailers. Almost every single month, you hear another retailer filing for bankruptcy because they're just unable to compete with the secular trend of retail moving to online. And so, Amazon, it's a stock that they'll miss estimates at least once a year, and the stock will correct a little bit. But that's always been a buying opportunity. And so, if I were to select a stock out of the three, I would choose Amazon.
And what about Amazon potentially getting into the pharmaceutical business? I mean, you hear, a potential buyout of Whole Foods, and then you hear the pharma. You just don't know if these are rumors, generated by the street or they're actual. I mean, what direction do you think they're going next? Do you think they'll actually want to try and tackle the pharmaceutical market?
The pharmaceutical market is a difficult market. I prior to Wall Street, I actually worked within a managed care setting. And there was a point where I actually did some drug-related work. I just think it's a highly regulated industry. It's a complicated sector as well. Drug distribution. This involves taking on inventory, medication. It's just a complicated process. And so, if they are looking at it, and if this rumor is true, then it'll take them a very, very long time to get any sort of significant penetration or scale. But I think there was a time, I remember when I first started in this business, I remember Jeff Bezos, when I worked at Bear Stearns, he presented at the Bear Stearns Technology Conference, and he said, there's certain things that's uneconomical to sell on Amazon, and he pointed to refrigerators and stoves. And you saw, now you can buy refrigerators and stoves on Amazon. You've been able to do that for years. So anything could happen in the future, but I just think it's a very highly regulated, complicated sector. I'm not seeing Amazon really making a dent in that market anytime soon. But category expansion is another bullish opportunity for Amazon, though.
And one more before we let you go here. Snap Inc. Boy, it had the nice pop off the IPO. Gave back those gains. Horrendous first report they delivered to the street. What I thought was the most interesting thing is, Snap came out 14 to 16. The street bumped it up 17 to 18. 17.59, the low of the move here, pop up to 21. Give us your short-term and longer-term outlook for Snap.
Well, I have a hold on the stock. I think there's a point where you could buy it, and clearly a point where the stock should be sold. And I still have concerns in terms of their ability to grow their user growth outside of the core demographic. I think they own that demographic of 13 to 24-year-olds, but to come out of that to grow significantly, I think they'll have to attract the opportunity from adults. The problem is that Instagram has essentially replicated everything that Snap has done, and from my own usage of Instagram, I've seen a lot of of my friends are starting to use those Snapchat-like features on Instagram now. So to convince them to come over to Snapchat, I think it will be difficult. It will be difficult for Snapchat, but that remains to be seen whether or not they could do it, which is why I'm still at a hold because I think there's potential. The second part is that I think ultimately, advertisers I speak with are salivating at the opportunity to advertise on Snap. I think they could garner a significant potential of the advertising dollars that are in front of them. They do have to work on the measurements. They do have to work on the tracking to get that ROI up, and that's what I'm hearing from advertisers. The ROI isn't there yet, but I think they're optimistic that it could get there. So I'm at a hold. I think the point to buy the stock is probably sub 17, and you sell it, when it kind of reached the high 20s. So, and I think that kind of brackets, how I think about the stock from right now. But I'm at a hold on the stock.
All right, sub 17
because of the challenges.
Sub 17 to high 20s in Snap. We've been on the line with Victor Anthony, Managing Director and Equity Analyst at Aegis Capital. Victor, thanks so much for hopping on with us today. We will talk to you again soon.
Thank you.
All right, S&P futures are not moving here. Up $1.50 at 23.83. Kind of a tight range here since we've been on the show. Victor Anthony covering a few stocks for us there. 8:50. 10 minutes to go on the show here. Dennis, you back at the wheel.
Yeah, I'm sitting around here. Yeah, VIX, looking here. It was fun when it got up to 15, Joel. Now we're at 12. Like I said, that was my best day of the year when we had that nice big pop in the VIX, and now we're drifting back down there, thinking about those single digits eventually here again. I don't know. See this S&P futures range is like a quarter of a point since we started the show. It's quiet again. Call it a holiday trade because it's a holiday in Canada, but same time here, it's just quiet trading.
And we have a 5-day work week, but we have Memorial Day weekend, right, coming up next Monday to kick off the start of summer. So very well, may see some holiday trading this week. I just wanted to talk a little bit about the financials here, and we've been talking Trump stocks and some of the moves, and the one that's caught my eye here is Goldman Sachs on earnings day. They hit it down to the 213 handle, found support there the following day, and then over the last three sessions, finding a range right there in the 213 to 214 area here. Is this enough of a technical formation here to take a look at this, perhaps on the long side?
Yeah, you know what? Because it coincides with the two lows we had back in April, the 213.18 and the 213.61. So I'd say as long as it stays above 213, bottom pickers might be actually, having a chance here. But it starts taking out 213, then I'm concerned. And the trend's not your friend here on the financials. It's funny to say that because it's been your friend here for a long period of time. But right now, the stock chart overall looks a little bit heavy. So I'd be concerned if it takes out 213. As long as 213 holds, maybe there's a chance for a bounce.
All right, another Trump stock here that basically doubled between November and February. U.S. Steel giving it all back. Now it comes
Unreal.
back. Yeah, and now it's filled the gap here. I mean, what about, this one? I've looked at their earnings reports, and it's like, they beat huge, they miss huge. There seems to be really no consistent earnings pattern. But, from my readings, New York Times, Barron's, whatever, like everyone's just so convinced that like a big infrastructure package or big tax cuts are not going to happen until 2018. So can you get excited about U.S. Steel?
I don't know. You look at AK Steel, which is AKS. This stock has been in a world of hurt here too. You look at Steel Dynamics, STLD. It's actually held on a little bit better than the other ones. And Nucor, which I do own in my investment portfolio, that's the way I'm playing steel. NUE, I know Kramer talks it too, but I still think it's best of breed. It's held on a lot better. But this U.S. steel chart is very concerning. I mean, we were over $40 2 months ago. We're now under 20. You can say, okay, well, it looks like a buying opportunity here because last time I got down here, we obviously had the big run back up to the 40 area. I don't know. I think the U.S. still has some issues, and that's why I'm hands off on it. It does have a 1% dividend. It does look cheap compared to where it was 2 months ago. Could, get a pop back? Sure can. It's went down a long ways in a hurry. So I think if you come in here and you're shorting it now, I think you're late to the party. I think it needs to get back up over 20, close over 20. Maybe I get interested for a trade. But longer term investing, I still like Nucor better than U.S. Steel.
All right, we got a few minutes left in the show here. We really haven't touched on much in ratings land, and
Not much to touch on.
well,
Spencer, what do you got for ratings?
What's your
'Cause
top rating,
I'm
Spencer?
scrambling here on ratings. There is not a lot of analysts chiming in here this morning.
One that I saw this one. Finish Line, actually. This one is a shout out to you, Joel. Finish Line called an upgrade from Modest Crispy Heart on neutral to buy. Joel had not heard of them, but I showed him that they were a real firm. So Finish Line with the upgrade this morning. Mylan called the upgrade from Barclays. Qualcomm upgraded JP Morgan. CREE Cree upgraded JMP Securities. Those are the big upgrades. Blackstone upgraded Citigroup, and then as far as downgrades go, nothing jumps out to me at all.
Blackstone's interesting. This is a big pop for BX. And what was the upgrade specifics on from Citigroup on BX?
The upgrade was neutral to buy. Remember, Blackstone also
Yeah.
just signed that, just had that deal with the fund with Saudi Arabia. So
Okay. That helps it too. You're getting a big pop here in Blackstone, and it's coming into an interesting area here too. We've struggled up here in the higher 31s multiple times, getting up to 31.69 back in February, also getting up to 31.44 as recently April 26th. It's right where you are right here, right now, 31.39. I mean, there is some technical resistance right where this is trading.
And you're looking at the pre-market high of 31.60. Dennis, you nailed it. 31.69. That was your high back in January. Just a few days ago here at 29. So 30, I really like that number. To me, this is a big leap here, just taking out like the 30 handle like it's nothing. So a longer term, I'd be more inclined to see it, come back and fill in that area. But getting a nice pop, and you got a pre-market high coinciding with a daily high. You can't ask for much more than that. And also, if you're licking your chops here on a longer-term chart, over 32 would be a nice break. You've had a 22-point move. That would take you up to the 33 area for 50% retracement of the big move. A couple stocks in the chat here. Dennis, you buying FEYE at 14.90 like you said last week.
Okay, last week I said I liked the stock. I didn't say I was buying though. I liked the stock at the 15. I thought it was a breakout. I think if it can hold that area, but you've been down here for a couple days now, and it's not bouncing off this area, and that is concerning to me. And it looks heavy to me here now. So I think 14.84, the low that I had on Friday, if it takes that out, I'm concerned. And it's when you want to see them. Okay, so when you have a breakout, stock broke out last Monday on the hacker stuff, and the stock had a good day, got all the way up to the 16. It held on better than some of the other cybersecurity stocks. But then it leaked, and then it got back down there on Wednesday. What happened? It stayed down there on Thursday. I want to see it bounce back off that level. It really didn't do it. And then it's down there on Friday again. That makes me feel like it wants to take out that support level. So I don't like it here now. I liked it, at 15. I'm still right here. 14.94 is the close, so it's kind of hanging out the same place. But now that it really didn't hold and really didn't bounce off the old support becomes new resistance trick, that is concerning to me. So that is why I'm not a fan here of FEYE. And long term, it just doesn't fit my investment criterion. So this isn't one that's probably ever going to make my portfolio here because it's not really a value stock.
Yeah, and we talk about the momentum when you're at an area and you don't get away from it. No pop in the pre-market here, so little gap to fill from last Monday. And the thing that scares me is, one bad headline. I mean, this thing could be back. I'd be more interested technically. Maybe we get under $13, 12.50 to 13. But once again, not a stock that I'm looking at really long term for my portfolio. NGG, National Grid PLC. Man, oh man, who's asking about this? Fuzzy. I mean, Fuzzy, if you're long to saying you just want to see it clear 69.82, 69.78, that was a close and the high right in the same area. So that could act as a good area. You're trading down in the pre-market. I don't know if it's on much volume. I know very little about this company.
I don't know anything about this company.
But you want to see it in 70. You want to see it in the 70 handle. Just if this is going to continue this kind of run, haven't been up at these levels, boom, since October of 2016. You had a 72.50 high, but trading down the pre-market, you want to take out that close in the high from yesterday. Dennis, any final comments kind of on this slow Monday here?
Just looking, it looks kind of like it wants to go risk on. I always talk risk on, risk off. It looks like it wants to go risk on. I'm seeing the financials get bid. I'm starting to see the TLT get a little bit heavy. It's starting to leak just slowly here. So it feels like it kind of wants to go risk on, but it's still at the crossroads here today. We can't determine whether, they're going to be piling in. But with this little bit of strength in the financials, obviously some of your defense stocks are really up strongly here this morning. I'm seeing even stock like Berkshire Hathaway trading up pretty good this morning. I think, it wants to go risk on. So that makes me cautious, the defensive stocks. I'm not talking defense like Lockheed Martin, General Dynamics. When I say, the defensive stocks, I'm talking the utilities. I'm talking, some of your, stocks that typically, the food stocks. Sometimes, your other, stocks I'm talking about. Well, you know what I'm talking when I'm talking defensive, the higher yielding stuff. So that's where, Clorox and your Procter and Gamble's and your Coca-Colas, those are stocks that if it's risk on, sometimes actually underperform. So it looks like it wants to go risk on. So I'm kind of looking at financials that are bouncing here this morning as maybe, going to be a little bit of a leader, at least early in the early trade. And then some of those other stocks, stocks with the higher yields, may actually underperform here if we do go risk on today. Also retail. I don't know why. I got a feeling that retail could have a little bounce in it.
All right, Spencer, what's on the docket for Tuesday?
Retail got that Barron's bump, or so Dennis says. All right, on the docket for tomorrow, a pair of guests, Sasha Evdokov, a trading educator and mentor and coach, and then Nick Shaheen, our go-to options guy. That's our show for the day. Hope you enjoyed Victor Anthony and our discussions. Please remember that all the information, material, and content is for informational purposes only and not meant to be investing advice. If you want to catch the podcast of the show, go on iTunes, SoundCloud, and Stitcher, or you can just watch the show again on YouTube. Have a good rest of your Monday. We'll see you folks tomorrow.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.